Hi, good evening from very sunny central London for a change. And for anyone who's listening in, thank you for joining as always. We're joining in from different platforms, including YouTube. And the way that I like to manage this session is, of course, ask as many questions as possible. This hour that I take out of my time is to just share as much information as to what's happening in the property market right now. So feel free to ask any questions. So the session today is really about mortgage rates, which is probably the biggest news that we've had over the course of the last week. I know that many landlords that I speak to on a daily basis, buyers and sellers, are always are anticipating a reduction in the base rates from the Bank of England. And it's fair to say that it's coming. It's just not right now. Now, the Bank of England, of course, have put the base rate on hold, which is good news, positive news as it is. Got a few people jumping in. Hi, Stephen. Hi, Leslie. Good to see you. And good to have you online. So base rate held at 5.25. Now, again, we see it as a positive thing, especially the language, at least, that they're having on the meetings seems very positive, talking about it's more of a when rather than a if the rates will start to come down at some point this year. And that's very promising to see. And we've seen this, that not only from a business level and environment, there's more confidence, but also from a property perspective, there's more confidence as well, at least for those who can make the numbers work. Now, of course, the challenge with this, guys, is that it's not going to be kind of a straight line and then goes down, as we can see. And I want to share this with you. So I'm going to share my screen with some news that has come up. Let's start with this one, which is, okay, this is not the one. So there's one here, which I had just come up. There you are. So bad news for landlords as lender increases rates on buy-to-let mortgages. So again, I say it's positive that the Bank of England have kept the same base rate. It's not gone up yet. There is reaction in the market, especially from the lenders. So we can see this is from today the 14th, either today or yesterday. The Santander today increases select residential new business fixed rate deals, as well as some landlord and residential offers. And Santander is not the only one, by the way. I saw a couple of other lenders as well, kind of shifting their fees as well. So, new 75% loan to value landlords 2-year tracker rate at 5.64% with a £2,000 product fee. And this brings up a good subject, actually, with regards to product fee, because I'm getting quite a few people asking me, Danny, is it best to get a high product fee and therefore get a low interest rate? Because you're going to have one or the other. You're not going to get the best of both worlds. If you're going to get a great interest rate from a lender right now, it's going to be a high fee. If it's going to be a low fee, it's going to be. And from what I've told, and I'm not a mortgage advisor, by the way, so don't take my word, especially when it comes to mortgage. I always say speak to a mortgage consultant. But having spoken to mortgage consultants and advisors, what they say to me is this has been introduced mostly during the pandemic, where those fees have gone up so substantially. And the reason is so that from a lending perspective, the numbers can work for those landlords who need to remortgage and rearrange, because otherwise, because of the rent, and especially during the pandemic where it was so uncertain, then this way let's say it's a very resourceful way to make the numbers work. And should you pay a high fee? As I said at the very beginning, that depends on whether you need that cash flow immediately. Of course, if you can do better things with that money and still make the numbers work with regards to a monthly payment, then that is something that's going to be very personal and a decision for you to make based on your financial situation. Again, best thing to do is speak with a mortgage advisor, and they will be the best ones to advise on that. So let's have a look. So we have someone here, H series. Hi there, good to have you online. Sorry for asking a question at the very beginning. How do you anticipate the recent interest rates hold will affect the mortgage costs in the near future? Well, we already. Oh, that's very fancy. I didn't realize I could bring that up. So you can see the question from H series. So yeah, great question. So it's had an impact immediately, as you can see. But I do believe that this is temporary. And I do believe it's going to have a little line like that and come back down as more confidence comes into the market. As I said at the very beginning, if you've just jumped in, the um, there is confidence both in the business and the property market that the mortgage rates will start to come down. At least the Bank of England will start to reduce that. Okay, so what other articles do we have here? And again, if you have any questions, guys, just feel free to pop them up. This is an interesting one. I don't want to move away from mortgage because I know, unless obviously anyone else wants to ask, but if we look at actually some news, now this news is a couple of months old, but it's interesting to look at from the perspective of landlord zone from the beginning of the year as to their kind of mindset on this. So held at 5.25%. This is because MPC in order were okay fluctuations. So industry experts and economists remain confident that we can expect at least 2 reductions of the base rate this year. So again, it just reinforces what I've just said. That this is something that they've been having in mind since the beginning of the year, and it will continue. I'd be very surprised if it goes past August and there isn't a reduction. So to answer your question, H series, I think there's obviously an impact right now, but keep an eye on it in the next couple of months. I think anyone who's looking to remortgage or anyone who's looking to invest in property right now should really keep an eye, continue to have that conversation with your mortgage broker. Because what's interesting to see, actually, let me just bring this up here. So what's interesting to see is how things can change so quickly. If we look at back in, and I'm trying to find this, but if we look at back in 2021, let me bring this up. If we look at back in 2021, rates, trying to bring up a rate. Okay, here you are. So this is a great example. And if I can bring up, okay, great. So this is a great example. Hopefully you can see my screen. And if we look at for the past 25 years in mortgage rates, and of course there was this huge peak here in 1998. I can't even begin to tell you how much that actually was, but I'm sure this article will tell us. So 1995, okay. So, but if we focus from 2010 onwards to 2023, we can see that 2022 was the highest from 2010 till now, the highest. Yet, if we look at when the lowest was, it was 2021. That's crazy. So if we look at this graph, within the last 13 years, the lowest point was 2021 and the highest point was 2022. This just shows how quickly the market can shift. And therefore, again, if you're a buy-to-let investor right now and you're holding back because of mortgage rates, you can't make the numbers work, fair enough. If you can't make them work, then you can't. But ultimately, keep an eye on it, and I will put deals together and just ready to pull the trigger based on what's going to happen in the next couple of months. My prediction, of course, and based on a lot of conversations that I've seen out there, which leads me to my next point. So Savills recently, I'm trying to look at a date for this, but I know it is very recent, sort of the last few weeks, if not months, have upgraded their 5-year forecast for the UK house price growth. Okay, so if you look at this here, 2023, it was negative at 1.8. 2024, they've adjusted at 2.5%. 25, 3.5. 26, 4.5, 5%. 2027 and 4.5. So a total between now and 2028. So in a space of 4 years, they are expecting double-digit growth, more than 20%. And it does look quite different to what they had last year. So again, there is definitely sentiment in the market that the market is shifting. And here's the thing, guys. What I'm also seeing at the moment is, and not just me, but the stats that we're seeing, is that the sales agreed right now have increased, right? And the reduction in price has increased as well, especially since last year. Now, in London, if I'm not mistaken, it was 2% back last year. Right now, it's 6% in terms of asking price to what the property actually sells for. However, in the broader market, that gap of asking price and price reduction is getting narrower and narrower. And I'm going to expect to continue to see that as the year goes on. Now, I'm not saying there's going to be a boom. That's not what I'm saying. And we're far off from any type of property boom. Yet there is confidence in the market. And London, I believe, offers an amazing opportunity. I'm seeing right now yields that I haven't seen in a very long time. I mean, in London, it was very unlikely to see any yields higher than 4% before the pandemic. Now it's very typical to see 5.5% in prime London. I mean, that's crazy. That's offering amazing value. And if we look at London as to what's done over the course of around about 10 years, it hasn't done much. So you're thinking, well, then why invest in London? Well, London is very unique in that it could not do anything for 10 years, 12 years, and then suddenly, wham, it starts to go up very quickly. And it's just very typical. Again, people invest in London for capital growth. If you're looking to maximize your yield, don't invest in London. It makes no sense. Go up north. But then where you're going to compromise in is in yield. In capital growth. That's where you're going to compromise on. So London has always been a safe bet for capital growth. And if we take into consideration the inflation, how much inflation has gone up, and London hasn't done anything, it's just remained flat. In real terms, London has actually gone down in price. In real terms, taking into consideration inflation. Because inflation has gone up. I couldn't even tell you right now, but we all know how much inflation has gone up. So we have a few questions here. In the light of discussions on the slow rental growth, how can landlords adopt their approach to leasing properties effectively? Well, markets shift, Leslie. That's what markets do, right? A boom isn't going to last forever. So you make the most of it whilst you can. And then you prepare for when that boom starts to slow down, which is what's happening here in the rental market at the moment. I mean, we saw rental prices go up back in 2019 anyway. Of course, the pandemic accelerated that to a completely different level. But when the government started to change the lettings fees and the letting fee ban of 2019, that really did trigger a lot of stuff because landlords then had to take on board all of these costs. Because what agents were doing, they were just passing on, okay, we can't charge tenants any fees. Great. Well, we'll then just charge landlords because the money has to come from somewhere. The industry has to adjust. The market always finds a way. So the landlords had to take on that cost. What the landlords do? Increase the rents. And that started back in 2019. Again, because of dynamics that I won't bore you with completely during the pandemic or after the pandemic, that has just accelerated that rent increase. So the best answer I could give you, Leslie, is just prepare, have a good agent that's going to be marketing the property and can negotiate the best on your behalf. And don't fall behind on what's happening right now with properties. Tenants are paying good money and they expect a good property. So good property condition. Right now, gone are the days whereby you can just have a property that you didn't paint and didn't update for like 10 years and it's like, it will just rent. tenants want to get value for their money. They're paying good money for their property, and therefore they deserve getting a good property and a well-managed property at that. So I hope that answers your question. Okay, so do you think house prices will go up or down because of the interest rate decisions? What should I do to adapt my plans? Great question. I think it continues to be, Stephen, a price sensitive market. But as I said before, that a gap between the asking price and the reduction and what it ultimately sells for is getting narrower from a broader sense of the market. So the UK, because let's not forget, there is two markets going on. There is the north and there is the south. And south has been lagging behind in comparison to the north. So that's one thing that we need to take into consideration. Yet, on average, on the broader market, that gap is started to get narrower and narrower. And with regards to interest rates decision, I don't think there's been a huge difference. Yes, lenders have adjusted their rates ever so slightly, but there is confidence in the market. So in the short term, it may have some impact in sales right now, but in the kind of midterm, meaning sort of in the next couple of months, I think you're going to be absolutely fine. And if you are thinking of selling at any time, it probably will be now. Number one, because of what the confidence and the sentiment that's in the market, but also I think there's a small window of opportunity before we start, which we're already started to see, we start getting that negative media about the elections, and that is, of course, going to have an impact on the property market for sure. And we can already see that. And newspapers, media's got to sell newspapers, got to get eyeballs, they've got to get the views, so they're going to paint a very negative picture. But for landlords especially, I know that doesn't impact things much, to be honest. Landlords invest for the long term. And ultimately, whether Labour's, unless there's something really radical happening, which it's already happened, the Renters Reform Bill, whether Labour is in place or whether Conservatives are in place in the long term, it really doesn't matter, guys, from an investment landlord point of view. Okay, great. So we have Marta. Good thumbs up there. Marta, what strategies or advice would you offer to me as a landlord to manage potential fluctuations in mortgage costs and maintain profitability? So, Martha, the best advice I can give you is you need to chat with a mortgage advisor and just plan ahead as to what is going to be the best option for you. It really comes down to every individual. Fluctuations, we only know what's happening right now. And if the numbers work, the only thing, best advice I can give you would be to try and fix it for a 2-year period. That is the best advice I can give you, because I believe that over the course of the next year or two, those adjustments and that confidence in the market, we're going to see lower rates so that you can make the most of the reduced rates. Hopefully, again, I don't have a crystal ball, but based on the data that we're seeing, lock yourself in for probably a 2-year so you can be back in shopping in 24 months. I hope that makes sense. So we have another one here from Stephen. Thank you, but given that selling my property isn't an option because I rely on the rental income, what strategies would you recommend for maintaining or enhancing my income? Okay. So if selling your property isn't an option, this may be a little bit of a band-aid, kind of temporary, but what we do know from a short-term point of view is that we have 90 days to be able to short-let your property, and you can really maximize on your rent in those 90 days. So if you're based in London especially, or a major city here in the UK, or perhaps even a tourist location in the coast, if what you need is a little, just get your head above the water, then my recommendation is look at short letting your property for those 90 days and maximizing, because ultimately you're going to be able to make, I mean, easily probably around 50% more, 100% more than what you would get on your long-term rental. And that can go towards, whatever financially challenges that you're having right now, and buy a bit of time until you see what happens towards as we go into summer. So I hope that is helpful, Stephen. And then more on the longer term, you've got to invest in your property. Make sure that the agent that's marketing your property is not just slapping your property onto Rightmove and Zoopla. To be fair, if you wanted to do that, you could do that yourself. You need a good agent that's going to be able to. There's free P's that we talk about within estate agency or in the property world, which is, let me just remove this, which is presentation. The property looks amazing. Promotion, so promoting your property to the widest amount of people out there that actually want to rent your property. And then price. So those three things, you get them right, and ultimately you're going to be able to rent the property to the right tenants. So short lets. And the thing is, guys, there is a video actually coming out very soon as to why property investment is a great option right now than it's ever been in the last few years. And some people think, well, Danny, you're crazy. Look out for the video. If you're not subscribed to the channel, subscribe, because it's going to give you some great information as to why right now is a great time to actually invest, and especially invest in London. But one of those, just to give you a little sneak peek, is the Renters Reform Bill. So you might be thinking, well, hang on, Danny, that doesn't make any sense. That's more regulation. Yes. But remember, Renters Reform Bill, if I'm not mistaken, was put in the manifesto by the Conservatives back in 2019 or thereabout. And there's been this huge kind of grey cloud and uncertainty over landlords about this, as to what this looks like, how far they're going to take this, and if they do implement this, the proposals at least, how aggressive they're going to go. And it's been this grey cloud. Now, at least there's certainty. Yes, there's changes coming. I mean, there's no way about it. It's passed by the House of Commons now with the Lords. It's going to happen. But at least we have transparency as to how it's going to be implemented. And now landlords can actually plan ahead with the information that they have. And what do investors like? They like certainty. So now they have certainty of what that Renters Reform Bill is going to be, and they can adjust, whether that's economically, whether that is logistically, whatever that may be. So look out for that video. What else do we have here? Okay. This is an interesting one from 10 areas where house price growth could top 14% in 2024. And this just builds into, and this talks slightly about the 5.25%. Okay, this is talking about the 5.25% last September. So, national picture. The analysis shows that since the base rate was held at 5.25 for the first time in September 2023, the average house price cost in Britain has declined at an average of 0.3%. Let me have a look here. If this trend continues through to the end of the year, the average house price in Britain could fall by 2.6%. And again, this is looking at the short term. Saville's looking more at the longer term of this, which paints a different picture, right? So, just two regions forecast for positive growth. We can see here. So, the Northwest, again, there is a divide right now between the North and the South. So the Northwest, the past 6 months has seen average monthly price growth of 0.4%. If this continues through to the end of the year, prices will grow by 4.3%, reaching a regional average price of £330,000. Meanwhile, the Northeast is seeing prices also grow monthly, an average of 0.2%. So, again, a lot of you, if you are based in London, you might be thinking, well, what's going on? You know, what are you talking about? Price growth. I have a London property and we're not seeing that growth. So, London is a lagging behind. And that's why I believe that there's a great opportunity right now for buyers. For sellers, I think there's also a great opportunity. As I said, that gap is narrowing. So let's go back to this article. I was actually in Derby a few weeks back looking at properties, and I think Derby does offer some interesting options. Um, and it's interesting to see that a capital growth projection is of 26% Derbyshire. And there are some great projects going on, regeneration around the station and other areas. So you've got Darlington being another area, and then you've got West Devon. So some interesting options here for those of you that are looking outside of London. I do love London, and London is always going to be long term, and it never disappoints, in my opinion. So, just looking to see if there's any other questions here. Otherwise, I'll jump on to my last slide, which is the rental tracker from Rightmove. So those of you who have jumped on to my previous lives, and we do know that rental, as we just saw on the other slides as well, previous slides, rental is growing in pretty much all parts of the UK. It's just at a slower pace than what we have seen the last 12 to 24 months. But London specifically is slower, and of course that is because London effectively is more expensive than most other areas. But we can see that there is a limit to this, and if there are any landlords online at the moment, pricing it right is always going to be key. I mean, I've just seen a property that was launched onto the market, and it was just put just below market price, just below, and it received something along the lines of around 50 inquiries in a matter of 24 hours, to a point where they had to literally just switch it off and just deal with those 50 inquiries. Went on to have 20 viewings. Out of the 20 viewings, over 50% of offers, so around about 12 offers. And of those 12 offers, they had 50% of those were above the guide price. So again, rental growth is slowing down, but the demand is there, and it will continue to be there. I have seen that a lot of people ask in regards to, hey, Danny, hey, Danny, so what's happening if landlords are exiting the market? Surely, there's got to be some leeway there as to what's happening. And the truth is, forget the landlords exiting the market. Even if they weren't exiting the market, there's still a short supply to meet the demand. The reality is there are more tenants now for different dynamics in the market. Of course, mortgage rates is a major one in terms of first-time buyers getting onto the market. But what we are seeing is portfolio landlords definitely picking up properties. Last year, not so much so. Last year, portfolio landlords were just holding on tight. This year, however, by God, I've seen a lot of portfolio landlords actually purchasing up properties, and they intend to continue to do so as the year goes on. It's those accidental landlords who've, the word is there, right? It's landlords who didn't go out to actually become landlords, be it because they inherited the property, they upsized and couldn't sell the property. Those are the landlords that just want out. And of course, you have those landlords who purchased properties within the last 10 years that maybe have a couple of properties and they can't make those numbers work. So they've decided that actually right now is the best time to just sell up because they don't want the hassle. I hope that this has been helpful. And again, we're trying to jump on every week to answer any questions that you may have. But right now, unless there's any other questions or anything else that you want to discuss, I have one here from Marva. How important are property management services for tenants' satisfaction, and how can I make the most of them? I guess I'll divide this in two parts, Martha. When I think about property management, I think about the service that you provide the tenant, and we're seeing the service side getting to another level comparison to sort of 10 years ago. And what I mean by that is if you're not familiar with build to rent, so there's been a lot of institutional landlords come into the market and whereby they don't just offer a shell, right, with some furniture and here you are, and this is what we charge for rent. There's so much more, and tenants are demanding so much more. So if we look at the likes of perhaps John Lewis, who have entered into the market as well, I don't know if they've launched their very first building, but similar institutional investors, landlords like that, they offer not only the amenities that come together with the buildings, such as gyms and maybe workspace, which become so popular and kind of a must, especially up north. I mean, up north, buildings with gyms, even swimming pools and concierge have become almost the norm, which seems to be light years ahead parts of London that don't have that. Of course, there are parts of London that have new builds and have all of that. It comes with a very expensive price tag. If you look at the likes of Battersea or King's Cross and N1C, where you've got certain buildings as well in Old Street. So yeah, you can rent a property up north for like £1,000 per calendar month and have all those amenities. But what I was trying to share with you, Martha, is that let me bring this here. What I was trying to share with you in terms of property management is certainly that the service that these institutional landlords are providing goes beyond even that. Restaurants and sort of have promotions with pizzas and things like that, game nights and just sort of different things. So it's really interesting to say as to what they're offering. Okay, so the second part of that question from a property management is to make the most of it is the compliance. You really need to be up to date with all the compliance and legalities and make sure you're not falling foul and falling on the other side of the law. So the best thing I can recommend with regards to that is, of course, join an organization. There's some great organizations out there, such as National Residential Landlord Association. You got Property Mark as well. So there's some great organizations there that you can be within kind of a core group of landlords and keep up to date and just go through the courses that you really need to do to be a professional landlord in today's world. I hope that's helpful. So, hey, Danny, asked a question above regarding people working remotely. Will appreciate your input. Okay, what is that about? Okay. Okay, Danny, would be great to have your suggestion on people working remotely. Do you think I should offer more flexible lease terms and amenities tailored to remote work? That's a great question. So the answer is, as a landlord, if you can help it, no. You don't want to offer flexible lease terms because ultimately what you want is certainty, and you want certainty. So to be blunt, if you can help it, you want to keep your property on a cycle because lettings is cyclical. It is seasonal, especially here in London. So you want your property to be available sort of around July, August, and September to maximize on that rent. That being said, if you've been following the Renters Reform Bill, you're not going to be able to have that fixed term. So to answer your question, in a year's time, Leslie, that's not going to be a problem. You're going to be forced to have that flexibility. So if the tenant wants to leave after 6 months, they just pretty much give you that 2 months notice on the 4th month, and they'll just simply leave and say goodbye to you at the 6th month. And will there be a lot of that happening? Potentially, exactly because of what you just pointed out here, which is there is a lot of remote working. So if a tenant can sort of jump from one side to another side of the city or of the UK or of the world, and they can work remotely, then why wouldn't they? I say this with a pinch of salt, because also if they're thinking of staying in London, they probably won't, because of the lack of supply. Then so let me put it this way: back 10 years ago, it's 5 years ago, it was very common for a tenant to stay, let's say, in Hampstead for a year, and then for them to say, actually, you know what? I'm renting. I want to change of atmosphere. I'd go and stay another year probably in Battersea instead of Hampstead, because I want to, experience different neighborhoods. But in today's world, with rental how it is now and the lack of supply, if you're going to be moving, it's going to be very specific, and you're going to stay in London, it better be for a very specific reason, like you're downsizing, you're looking for something cheap or something like that. Otherwise, you won't move just for the fun of it, unless you're going to be moving to somewhere else, another part of the world or the UK. So I hope that answers your question, Leslie. Okay. So thank you for joining, as always. I hope you're finding these videos helpful. And we're going to be back next week. Is going to be actually Tuesday. So we're changing the day for the next couple of weeks. We'll be jumping on a Tuesday instead of a Wednesday. So just make sure you're subscribed. If you're subscribed, you'll find out the you'll be updated with everything. Thank you very much. Stay safe, guys, and thank you for joining.